How does Warren Buffett invest? What are his common rules for investing? This is not for a novice investor. This is for somebody who has spent a lot of time in the market. So let us discuss the 6 rules of Warren Buffett's investing strategy. But first, hit the like button, press the subscribe button. It's not enough if you subscribe. Persuade your friends and relatives to subscribe. Turn on the bell notification if you want to receive every video we put out. The algorithm does not automatically send the video to you. You have to have the bell notification for every video to come. So let's look at Uncle Warren. Welcome back to Be Rich. The 6 rules of investing are: cash is not a great investment. That is, if you keep money in a bank, it is very poor investment. If you keep a money in the bank with less than 7% interest, then you are practically losing money. This is because in India, inflation is 7% plus. So, actually, by keeping money, you are losing it. In America, checking bank account is at zero interest rate. Inflation is at 2. So you lose at the rate of 2% if you keep cash in the bank. The second point he says, very important, money should work for you. So you put your money in. Either you become a partner in business or you lend money. If you lend money, you get interest. If you become a partner in business, you get share of profits. If you become a partner in a listed company, the partner does not pay you regularly. If the company does well, you get dividends and the value of your stock goes up. So basically, if the underlying company performs well, you will do well. Buffett says gold is a bad investment. I agree that as far as America is concerned. But as far as India is concerned, where the poor have no access to credit and they don't get credit on demand, where you have to submit all sorts of papers before accessing credit at a reasonable rate, gold is a brilliant investment because against gold, you can raise money cheaply and immediately. So in America, gold is not a productive asset. In India, gold is definitely a productive asset and must be the foundation of your investment strategy. 3. This is my favorite rule. Buffett says everyone has a circle of competence and one must stay within it. I know what is my circle of competence and I talk within it. When I deviate from my circle of competence, I look stupid and I look foolish and people will jeer at me. So, always stick to the circle of competence. In your job, you know exactly what you can do. So, do what you know well and avoid what you do not know well. Yes, you can expand, you can develop new skills and expand that circle of competence. Ever expand it all the time and do take new jobs. But always remember, you should know where your circle ends and when you go out of the circle of competence. When you start operating in areas where you do not have circle of competence, you will be punished and punished big. 4. You go to a neighborhood store, you like the product the company is making. Peter Lynch says that a great way to invest in shares. Don't go and jump and buy that share immediately. You should be able to financially evaluate the company. You should be able to read the annual report. In the annual report, there are 3 important statements that you must read. One is the balance sheet. It tells you the asset and liability of the company on the day that the accounts are closed. It's a snapshot of the assets and liability of a company on the day the book of accounts are closed. The second important thing is a profit and loss. This is normally for a 12-month period, can also be for 3 months or 6 months. Basically, it tells you in that 3 months what is the revenue the company has done, what are the expenses, and how much you can pay for the car, how much money the company is making. Normally, companies are valued by trailing earnings, not projecting future earnings, because the future earnings may be not realistic and we don't know what is going to happen to the assumptions you make. So once if we can evaluate a company, then you know the price, which is a fair price. And if you buy below the fair price, then you get a margin of safety. As the difference in price between fair price and the actual price varies and gets larger and larger, the chance of making a safe profit increases. If anybody had invested in Karnataka Bank or Karur Vysya Bank up to last 2 months, you would have made sure that when the market discovered the fair value, you would have made 30 to 40% money. When you really find a good one, play big and don't waste the opportunity. That is, you should have practiced your craft for many years. Once you have practiced your craft for many years, you keep increasing the bets, increasing the money invested slowly over a period of time. Once you have practiced enough and you think you know the subject well, and you know a company meets all the criteria and it's trading below its fair value, then you bet the bottom dollar on it, hoping that you would go make a lot of money. IndusInd Bank, for some reason, was trading way below its fair value. And if anybody had got into IndusInd Bank at the right time, they would have made a killing. So, IndusInd Bank, both at 350 originally, and then went up to 700, and then dropped back to 500. It was a too good a chance to miss. The people who invested at that time have made nearly 100% profit on the price they paid. So, when the chance occurs, invest big and play big and don't become defensive. Finally, the greatest investment you can make is an investment in yourself. Most people stop reading the day they pass college and do not add to their knowledge. So, when I say invest in yourself, there are three things: take care of your health, exercise regularly, and stay fit. The second thing is dress and groom well. It's not enough to be rich, but it's very important to look rich. And third is the important thing is that you should continuously be improving and reading. The rule is that at least 3% of your income has to be invested in training yourself. This 3% rule will greatly benefit your ability to increase your knowledge and the scope of work. Thank you for watching. Be rich. If you like this video, press the subscribe button of my channel, hit the like button and turn on the bell notification. If you use Kindle, you can buy the book using the Kindle link given below. If you want a hard copy, send a message to the WhatsApp number given below and my team would get in touch with you. At the very end, if you want to get in touch with me, please send a mail to berichenglish@gmail.com. I am grateful for your support of Be Rich.